Okay, welcome everybody to Wall Street Reporter's next Superstock CEO live chat. We have with us once again next Superstock presenter, Peak Fintech Group, Joseph Johnson. Welcome.
Thank you, Jack.
So Johnson, you've had some very exciting news in the last few weeks. I don't think investors really understand kind of the importance of it because the stock hasn't moved that much on these news items. So I want to kind of get into that in just a second. But we do have a lot of new people in the audience. The audience is growing for Peak Fintech. So can you, for anybody that's new, can you explain to us what your business model is and kind of the size of the market opportunity you're going after in China?
Sure, absolutely. Once again, thanks for having me, Jack, on the program today. Very, very happy to be here and connecting again, once again, with your audience. Now, as Jack mentioned, for the benefit of those who are not too familiar with the company, Peak Fintech Group, we manage a commercial lending platform. And essentially what we do is we facilitate loans between small businesses and lenders, banks, financial institutions, and other institutions who are looking to lend to small and micro businesses. So what we do is we invite small businesses to simply register on the platform, on the ecosystem. They give us access to their information, their accounting, directly from their accounting software. And they allow us to pull data on their business from various public and private sources. Now, we gather all of the information that a financial institution would need in order to make a lending decision, a credit assessment of the business. On the other side of that equation, we invite financial institutions, banks to enter their lending criteria, and we use analytics and artificial intelligence to match the data that we collect on the small businesses with the lending criteria of the lenders. So essentially what we do is facilitate lending and credit transactions between small micro businesses and banks and lending institutions. And once a transaction happens between the borrower and the lender, we collect the fee. Essentially, that's the business model of the company, and the fee varies between 1% to 3%. It can get as high as 4%, depending on the lender and the value of the loan, but typically it varies between 1% to 3% of the value of the loan. Essentially, that's how we generate our revenue.
Okay, so basically, you're creating these kind of qualified leads for lending institutions, and you get a percentage of the loan amount that they originate.
Correct. And in a nutshell, yeah, that's what we do. But okay. We gather information, we aggregate the information, and it's more than just a qualified lead. These are really specifically based on the criteria of the lenders. Like, I mean, the lenders could not have done it better themselves if they spent, a day, a week, or whatever amount of time analyzing these files. We allow them to do that in a matter of minutes, very, very efficiently.
Okay, and how big? Okay, so in China, how big? You're going after kind of the small to medium sized business.
Small, medium, and also micro businesses. And
micro. Okay, so how big is this market opportunity in terms of like what is how many loans are outstanding right now, or what's the potential, and how big do you think Peak can be in this market as a player?
Listen, we're going to get to that in a minute, but in terms of the revenue potential of the company, but just the size of the market in terms of number of small and micro businesses, we're talking about well over 100 million of these businesses out there. China is the largest market for fintech in the world, and that's one of the reasons why we're in that space. Now, as I was saying before, I really want to put in context the deal that we announced earlier this week on Monday with the Beijing Dianjin company, BDC. Now, as I mentioned before, we earn between 1% and 3% of the value of the loans that we facilitate. We established demand for our product and services started back in 2018. We were in the city of Wuxi in China, in the province of Jiangsu. And in 2018, we generated $1.6 million in revenue for our services. And 2019, that scaled up to 11.7 million. And this year in 2020, it's all about growth. We're really looking to, we've already established the demand for the product. We're really just looking to grow the service across China and across different verticals and scale revenue. Now we're forecasting 40 million this year in revenue. So it represents a significant jump, obviously. We have gone from
massive,
yeah, right. But the deal that we're talking about here is a potential game changer for the company. Now, here's what I mean by that. Now,
go ahead.
Now, the forecast, the 40 million that we're forecasting this year does not include the potential behind the deal that was just announced on Monday. Now, the deal with BDC, the BDC's got 60,000 online retailers. They first of all, they are a distributor of consumer electronics products, right? So they sell laptop computers, cell phones, televisions, you name it, right? We talked about in one of our news releases about the Baidu smart speaker. So that's now one of their products. That's the space that they're in. Now, they are a distributor, a reseller, excuse me, a facilitator for 60,000 online retail stores in China. And these online retail stores sell on the three largest e-commerce portals in China. I'm talking Tmall, which belongs to Alibaba, JD.com, and Pinduoduo. Between the 60,000 retailers that BDC is selling to, they collectively sell probably around $50 billion worth of products on an annualized basis, right? So these obviously, like, I mean, these are huge numbers. Now, BDC was not offering financing to these clients. Now, we obviously saw this as a huge opportunity. So we went to BDC and we said, hey, listen, you know, these clients of yours, they're already buying a lot of your products. Imagine how much more they could be buying if you offered them the opportunity to finance their orders with you, right? So this was an attractive offer proposition for BDC. So they listened to us. We talked to them about various business models, but essentially what we want to do, what we ended up doing is we agreed on bringing the lending hub services to those 60,000 online clients. So that's the deal that we're about to sign with the BDC. Now, let's look at some numbers, very high level, Jack, just for the benefit of your audience to understand the potential behind this deal, right? So these 60,000 online retailers sell for $50 billion worth of product every year. Now, according to BDC estimates that roughly 50% of those stores will jump on the opportunity to get their orders placed with BDC Finance, right? Okay. So, if we're able to facilitate $25 billion worth of credit transactions that these 60,000 plus online clients are going to be placing with the BDC. If you look at the average, the range of percentage of fees that we make between, we talked about 1%, 1 to 3% of the value of the orders that we facilitate on the platform. So $25 billion on the lower end, we're talking about annual sales here. Okay, on the lower end at 1%, that would represent roughly $250 million in annual revenue for the company. On the higher end, at 3%, that would represent $750 million worth of revenue on an annualized basis. Now, I'm not saying that tomorrow we're going to be facilitating all of a sudden $25 billion worth of transactions through the platform based on this deal, but certainly we will be able to very quickly start offering financing and scale up eventually to those levels of $25+ billion worth of transactions.
Okay, so Johnson, so let me ask you this. Okay, so basically, to sum up, you're going to have the opportunity to offer financing to these e-commerce vendors that these guys have. They have 60,000 vendors. And where are they selling? They're selling on what is it, Alibaba or whatever?
Right. They're selling on Tmall, which belongs to Alibaba. They're selling on JD.com and they're selling on Pinduoduo. Again, those are the three largest e-commerce portals in all of China.
Okay. And okay, so essentially you're going to offer them financing. Now, are you going to be essentially you're going to be like giving these leads to your financial partners? How is this deal going to work?
Correct, right. So the way it's going to work is the way everything works currently on the Lending Hub. The Lending Hub is a platform. It's an ecosystem where small businesses basically sign up, right, in order to have access to loans. Whether the loans are for to purchase material, to purchase equipment, or whether the loans are to basically business expansion, whatever the case may be. We have a variety of lenders that are already part of the Lending Hub ecosystem, right? So these small businesses are going to offer loan opportunities to those lenders that are already on the platform, right? So we are facilitating those loans. What we're going to do is we're going to start to analyze the sales, the transactions of those 60,000 online retailers, and those that qualify will receive opportunities, basically offers to have the orders that they place with the BDC financed, essentially.
Okay.
And a fee for that.
Okay. So, even, I mean, so, their total, they're doing what you said, 60, whatever, 50 billion and, whatever, 50 billion, whatever, these, the big numbers. Yeah. But so even if you get, I'm just being conservative here. Let's say you get 5 billion in sales that you can finance for their customers. That's 50 million plus revenues for you at 1%.
That's correct.
At 1%. So now, this is basically goes right to the bottom line, right? Because it's not like you have costs; it's pure margin.
Well, this is what we're talking about here. Like you're absolutely right. Like, I mean, we are looking to offer additional services to those 60,000 online retailers. Those services would be offered in partnerships with some of our partners. What we're talking about here today is basically just the fees that we would be earning from the financing opportunities that we would present. So you're right. Like, I mean, it's essentially, I don't want to call it pure profit because there are some small expenses associated with operating the platform and marketing and so on and so forth. Right. But you're right. It's software, right? And the margins are very large on this transaction.
Okay. And how will this work? In other words, how does this partnership work? Are you splitting the revenues with BDC, or how does it work? It's like,
you see, BDC is already making the margins, right? Because they're selling the products, right?
Okay.
So their markups on the products and the financing opportunities that they're offering to the clients will only allow their clients to purchase more from them, right? So they're already making that kind of revenue from the sales. That's their business. They're a distributor, right? So they make revenue from the sale of the products. Now, the joint venture that we're creating with them, because they are bringing a lot to the table, right? Like BDC's they have relationships, by the way, not only with those 60,000 online retailers, but they have direct relationships with Tmall. They have direct relationships with JD.com and with Pinduoduo, right? So they have information on the businesses that we need, right? We need to have access to this information in order to analyze it and assess the credit worthiness of those businesses. So because BDC has additional, assets, whatever you want to call it, that they're bringing to this deal, we're creating a joint venture with them, and we will be majority owners of this joint venture, but BDC will also share in the revenue that's generated from this joint venture. Now, according to what we've been talking to BDC, this is basically just the start of the deal. We will have an opportunity basically to acquire 100% eventually of this joint venture. Now, BDC, because of the relationships that they have with JD.com, with Tmall, and so on and so forth, we're looking at working with them to us, Peak Fintech, to possibly have relationships directly with JD.com or with Pinduoduo or one of those large e-commerce portals. Now, imagine for a second, Jack, we're talking about 60,000 retailers, right? 60,000 retailers. If you look at the size of the market, we're talking about a market in China that has in excess of 100 million small and medium-sized, small and micro businesses that we can go after, right? So what we're trying to do in 2020 and beyond, as I mentioned, it's all about growth and expansion, right? We're looking for ways to instantly have access to a large number of clients and bring them into the fold, become part of this lending hub ecosystem that we've created in China. Now, the interesting part about Pinduoduo, JD.com, or Tmall, I believe, I don't have the exact numbers, but I believe collectively between those three online portals, they have upwards of 7 million online shops that sell on these platforms. And JD.com itself has an excess of 1 million online shops. Now, we're starting to work with 60,000 shops who do business with BDC, but eventually down the line, we may be in a position, because of BDC's relationship with those online portals, to have a direct relationship with those online portals where we begin to offer financing to their millions of small online shops that sell on those platforms. Actually, I call that small.
So yeah, I mean, these are some very substantial numbers. Okay, so just to recap, and we're going to jump into the audience questions because we've got a lot of comments and questions coming in. Mm-hmm. So that's, I think, really that's going to be the focus today is answering some of these audience questions. Right now, how many shares? Well, what's the market cap of Peak? Is what? How many shares fully diluted do you have outstanding right now?
Okay, fully diluted, we have, I would say, around 130, 140 million shares outstanding. That includes the last financing that we did just a couple of days ago. So okay. We have roughly 140 million. Sorry.
So around 45, 50 million market cap, Canadian.
Canadian, right? Okay, yeah, right.
Okay, and so and you're doing right now. You did 7 million revenues last quarter, right? You did 7 million last quarter. You're on track right now before today's news of doing 40 million. So you're really trading at like 1x, right around 1x revenues based on the current, run rate, more or less.
Correct. Yes.
For a fintech company, I mean, so in terms of fintech companies, I will actually, those of you in the audience, maybe you guys can pull up some numbers. I don't know what Square and what was it, Alibaba maybe is in the space. So what are the multiples on fintech players, especially in emerging markets? If anybody wants to pull that up, that would be interesting. So that's very compelling. Here's my question. These companies, why? I mean, why can't what's the competition like? I mean, can't I don't know, Alibaba offer this type of deal? Or can't,
that's a very good question, Jack, and I want to touch on that because we get that quite a bit, right?
That's the obvious question, right? So I'm sure
right. People are asking you, what? I mean, because Tmall belongs to Alibaba, right? I think everybody knows that, right? So they're saying, well, Alibaba can easily do this, and what Alibaba has done really is they do have a financing arm, right? It's called Ant Financial, right? Ant Financial, Alibaba's they have Tmall, they have Taobao, which is a consumer-to-consumer portal, which is almost as popular as the Tmall B2C portal that they have, right? So Ant Financial offers financing to the clients that are on those platforms, but they offer a different type of financing. Now, Ant Financial is more focused on consumer, if I'm not mistaken, but they do offer small business loans, but they're not offering the loans in order for the businesses that are selling on those platforms to purchase inventory or anything like that. What they do is they will give cash advances. They'll lend based on inventory and so on and so forth, right? They have visibility into all those transactions. So they extend loans based on the receivables that the businesses have and how much cash they've generated on the platform. But they're not specifically lending for those businesses to place purchase orders, right? So as far as we know, they're not doing that right now. This is something that we would be bringing, and we know for a fact that JD and Pinduoduo would be interested, we believe, in this offering based on the discussions we've had with BDC. I just want to be clear, we have not yet had any direct discussions with JD and Pinduoduo, but based on the information that we've received from BDC, from our partners, our future partners, there would be an opportunity for us to get into that space. Now, going back to Ant Financial, okay, and connecting the fintech space in China. If you're going to be a fintech player, you basically cannot ignore the Chinese market. I mean, we're talking about a country with a population of 1.3 billion individuals, over 100 million clients. There is no market like it in all of the world, right? So if you look at Ant Financial, and this is something I mentioned the last time I was on the program, is they're in position right now to conduct the largest IPO in history, right? I mean, they are about to raise, I think, $35 billion with their IPO. I forget what the pre-IPO valuation of the company is, but it's ridiculous. Again, they are in that space. And if you look at what we're doing, I mean, we're not looking to compete with the Ant Financial of the world or anything like that. But the market in China is so enormous, right? We're playing in a space right now. I'm talking to you about thousands of businesses, right? Our focus is all on small and micro businesses. I'm talking, and the numbers that we're talking about in terms of revenue potential, how much PKK is going to be doing this year, next year, over the next couple of years, we're talking about thousands, okay? You know, thousands of small businesses. We're not even talking about hundreds of thousands of businesses yet.
So it's a small, basically, you're getting right now, it's just a tiny fraction
It's
of
just
the market.
peanuts, essentially. You know what? But if we do things right, if we do things right, and we remain in that space, and honestly, we don't need to get to the point where we have 1 million or a couple million small businesses. By the way, 1 million would represent less than 1% of the potential market space, right? But we can't even do projections, honestly, Jack, with 1 million small businesses that we're facilitating credit on, okay? That's the market that we're in, right? So we're talking about this year. I mean, a lot of people raise eyebrows. Earlier this year, when we put out our forecast, we said, okay, we're gonna do 40 million this year. You know, people were like, wow, like, I mean, we don't believe it or whatever, but no. Like, I mean, if you look at the company's business model and the space that we're in, I mean, $40 million is like, it's like peanuts for us. Like, I mean, we're seeing well beyond that in the coming years, especially when you consider the kind of deal that we just signed with BDC.
So, okay, so let's jump into some audience questions. I will start with, first question is, he's asking, Chinese government is urging banks to cut fees for small business. Will this affect your revenues?
You know what? We are, there were some exorbitant interest rates that were being charged to small and micro businesses, specifically because of the fact that they have a lot of difficulty accessing credit and loans, right? So some lending institutions were charging 20, 25% annual interest rate, which was ridiculous, right? So yes, the Chinese government is saying, okay, you know what? Like, I mean, that's outrageous. We need to put an end to this, right? So they've basically, I forget what the maximum is, but you can no longer charge above, I think, 20% annual interest rate for a loan. But the loans that we're talking about here on the financings of the purchase orders or whatever, we are in the range of between 10 to 15%. Like,
it's very low for
yeah. So we are well within the reasonable range as far as concerned.
Let's see. Okay, we got a question here. Serge is asking about the city of Jiangyin. Why so many financial institutions came on the platform same day? Is there a guarantee of loans by the city?
Yes, I mean, yeah, we can easily answer that question. If you go back to the press release that we put out about the creation of the financial center with the city of Jiangyin, this was something that was negotiated with by the city officials. There are a lot of financial institutions who do business in the city of Jiangyin. So when the idea for the creation of the financial center was being talked about, city officials went to a lot of the banks that were already doing business in the city of Jiangyin, and discussed the idea of the financial center with them, and they almost pretty much, I think like 90 or 95% of the banks that were offered the opportunity to be part of the financial center signed up to be a part of it. So that's how we're able to get 30 banks just in one shot, all of a sudden, to be part of the ecosystem and the financial center in Jiangyin. Now, there is a guarantee, and that's also stated in the news release. The city of Jiangyin, along with some insurance companies and private funds, created a fund that would guarantee the loans that were facilitated through the lending hub platform. Through the financial center, but still managed by the lending hub platform.
Okay, I guess this is a question or a comment. Edward is saying that final 2 quarters are going to average 50 million in revenues each. Is that, Johnson? Any comment?
Yeah, I guess yeah. If you look at what we've done so far, between, I think we have what Ez is saying is we are 30 million, a little bit less than 30 million short, because we've generated so far between the first and second quarter, we have generated almost $12 million. So for us to get to $40 million, we need to generate 28 million. So it's a little bit less than 15 million, but yes, that's what we would need to average in order for us to reach our objective of 40 million.
Okay, so Safraz is asking about revised projections based on this new development for 2021.
I think without a question, once the deal is finalized with BDC and we have better visibility into the numbers, we run through our forecast, we have solid numbers, I think we have no choice. We will definitely have to revise the forecast that we put out, because those forecasts will no longer stand.
Okay. So we got a question here. Okay, so we got a lot of questions. Okay. Hang on a second. I'm scrolling up here. We got a bunch of questions. Looks like that I missed. Okay. So we got a question. We talked about margins before. I asked about the margins, and I guess so that in terms of margins, what are the margins on these, on these deals?
What are the margins? You know what? As I mentioned before, right? Part of this deal, we're going to be offering additional services to these online shops. Here's what I mean by that, right? So the deal that we're going to be signing with the BDC is the supplier, right? So they will supply the laptops, smart speakers or whatever and stuff like that, right? So the retailer will place an order, and that order will have to be, for the most part, that order will have to be warehoused somewhere, right? And then when an order is placed, when a consumer buys a product, that order will need to be shipped, from the warehouse, it'll need to be shipped to that consumer who purchased the product, right? So what we are looking to offer to BDC's clients is a full turnkey service where we offer the financing of the products, the warehousing, and the shipping. Now, we have a partner, okay? A partner called Wuxi IDG. Wuxi IDG offers logistics, shipping, warehousing, and everything else that would be required. They're going to be part of this agreement as well, right? So if we look at the full service that we provide to the online shop, okay, so we will charge, for example, this is just an example, right? Let's say we charge you 15%, right, to finance the orders, and that also includes the warehousing, the shipping, the handling, everything, right? So all you have to do essentially is just market your products on those online stores. We take care of everything. And in that 15%, everything is included. Now, we charge the 15%, right? So that's our top line, okay? But the numbers that I was giving you earlier, Jack, that was not, okay, the top line. What I was giving you was basically just our portion, right? So this is how it's going to work, right? So we're going to be charging 15%, and let's say we're going to pay 10%, okay, or 11%, whatever, 12%. This is still being negotiated right now. We're going to keep between 3 and 4% for ourselves, right? And the rest is going to be split between Wuxi IDG and the financial institution, if it's not Wuxi IDG themselves who finance the deal, right? So actually, the top line numbers that we're going to be presenting are going to be much larger. As far as this deal is concerned, it would be much larger than $250 million, right? Okay. So I'm the lower end that we're talking about, okay? But the 250 million basically just represents our portion of that transaction. This is the 3 or 4% that we would be keeping ourselves.
Okay. So it's interesting. So basically, so if you're working with
so just to make this clear, Jack. Okay. So I know the question was about margins, right? So they're talking about, okay, the $250 million. Okay. Once you remove the expenses, what's going to be left? What's the margin? No, what I'm telling you is that the $250 million, that is the margin. Like, I mean, that is like the pure profit. The top line, the actual top line number is going to be much higher.
Okay, so we got a question about that just came in about the shipping. So I guess the logistics part. So you mentioned this logistics and warehouse component. So I'm kind of assuming that basically these loans are essentially kind of collateralized by this inventory. It sits in the warehouse.
It's very, very secure, Jack. Like, I mean, that's
okay. So that makes a lot of sense. So basically, that's pretty interesting here. Okay, so
we're going to provide, by the way, we're going to provide more details about the deal itself, so that people have a better understanding of the deal, the potential behind it, and how the whole thing is going to work. We expect to sign that before the end of October, so your audience can keep their eyes peeled basically for the upcoming announcement of that deal.
Okay, so I was asking about the multiples, the valuations in
wow.
Square. What's their the multiple, the revenue multiple? What is it? How many? What is it times the revenues? I don't know.
I think we've looked at comparables in our space, in the fintech space, and for the most part, we're talking about between 10 to 15.
There we go. 10 to 15. 10x.
There you go.
10x revenue.
10 to 15 times revenue. Yeah.
Yeah. So basically, I guess, based on the Square, which is, so the upside for peak is really 10x from here. I mean, the stock could be, $4, $5. If the market kind of wakes up and kind of starts valuing it based on, where other players in the space are. That doesn't even include the premium for like that China, the emerging growth premium. But I think kind of the China thing is a double-edged sword right now, because I think some investors are kind of scared by China. They're worried, this is going to be, this whole political thing that's happening with the U.S., China, back in Canada even. So that's maybe putting a little bit of a damper on it. But at some point things will open up.
Jack, it's all about revenue, profit, and again, that's if you're in this fintech space, like, I mean, that's just a market you cannot ignore. And going back to your valuation thing, I mean, I thought that's why you had us on the show, Jack. What's the program called?
Next Superstar.
There you go.
Exactly. That's what we're here. So that's what we're looking for. Again, anybody that's watching this video for the first time, our goal is to bring companies which have that 10x to 100x upside. And we've had this year 3 stocks that have already been 10 baggers or more, 20 baggers in case of Cytodyne. So here, I think what I find interesting about peak is that you actually have that kind of clear path to that 10x upside, because if the valuation gets in line with the peers, there's your 10x. That doesn't even include the upside that you have with this new deal and some of the other stuff you have coming up. So that's
Jack. Listen, Jack, it's just a matter of time. Like, I mean, that's why we're here. Like I said, we spent the last couple of years basically establishing the demand for the product, right? So that's done. We don't have to do that anymore. Like, I mean, there's proven demand for our services in China without a doubt, right? So it's all about expansion and scalability right now. So we're looking to scale the business, and there's no doubt in my mind. Like, I mean, the company's hidden. We're a small company out of Montreal doing business in China. I doubt a lot of people know about this company, particularly on the US side.
Nobody knows about it. No,
exactly. Nobody knows about the company, but I mean, it's not going to be a secret for much longer, right? Like, I mean, we're on your program right now. We're going to come back once the deal is announced, basically, and we're going to get in people's faces for them to realize, and eventually, I mean, we're going to get some institutional investors to, understand the business. We're working on getting analysts to start looking at the company, putting out research reports, comparables with other fintech players. So it's just a matter of time. I mean,
there was actually a report that, what is it? There was an interesting analyst report that came out. Was it last month? It had like $1.80 upside.
Yes. I mean, this was a research report that was put out by a very respected analyst, Chris Thompson, out of eResearch. But it's all Canada, right? Like, I mean, I don't know how much reach eResearch has in the U.S., but we're looking at working with let's call it let's say some higher profile U.S. based research companies to start to shed some light on the company and get the word out there in terms of how undervalued this company and how much potential it has.
I forgot. That was $1.40 or $1. What was the upside target?
No, I think initially he had forecast a $2 price, if I'm not mistaken. Okay. And given the fact that the revenue this year for the first quarter were a little bit under the 40 million run rate, he had, I think, revised that to $1.80. But again, I don't think I'm fairly confident that we're going to make our 40 million target this year. And as one of your audience members suggested earlier, we will likely have to revise the forecast at the end of this year in light of this deal and other deals that we could potentially sign between now and the end of the year.
So, okay, so here's an interesting comment, which I guess he's saying 250 million revenue, right? If you do 250 times 8x revenue multiple is 2 billion market cap. So that's from here. What is that? That's 50x upside.
Listen, I'm not sitting here. Okay, I know that some investors have a tendency to get excited and stuff like that. Well, frankly, they have a reason to be excited because we have been delivering right on the revenue forecast. Back in 2018, we had forecasts that we were going to make 9 million. Right. So in 2018, we made 1.6 million. And at the time we said, okay, you know what, we're going to make 9 million in 2019. A lot of people were doubting us. They were like, no, whatever. But you know what? We delivered. We went from 1.6 million to 11.6. We almost made 12 million, right? So now I think some of our shareholders understand that they can trust us when we put out forecasts, right? So they don't doubt. Some of them don't doubt that we're going to make the 40 million. So if we're starting to talk about, 250 million or whatever, I'm not saying we're going to do that. Like, I mean, we still have to forecast after we look at the numbers. We sit down with BDC and we see really what can be expected over the next couple of years. We'll put the forecast out. But I think people know, some of our investors know that they can trust us now. When we put out forecasts, it's because we have solid assumptions and solid numbers to back those forecasts up.
Okay. I mean, yeah, the company has been around for a while. It's just really unknown in the U.S. I mean, even in Canada, the stock is not well known. I mean, you have some revenues going back. So Angel is asking, so what you're expecting, the total notional under the agreement with was it Jiangxin? That's the city, I believe.
Yeah, that's the city of Jiangxin. You know what? We don't have all of the numbers here yet for the city of Jiangxin. The financial center is still fairly new. We're going to give it a little bit of time, basically, to run, and we're going to be talking with city officials and some of the financial institutions that have started to extend loans based on the lending platform. Then we'll be in a better position, basically, to give a better understanding of what that deal, because that's also obviously another significant deal for us, the financial center, and that's something that we plan on replicating in other cities across China. But Angel, I'm sorry, but we just don't we're not comfortable sharing some of those numbers yet. But give us a little bit of time; we'll be able to share that information with investors as well.
Serge is asking, any plans to do dividends down the road?
Okay, yeah.
These days in the tech world, very, very rare.
I'm sorry, what was that, Jack?
He was asking do you plan to do dividends?
Yeah, obviously. I mean, that's something that, I mean, if you're going to be a profitable company, which we intend on being, this year, next year, whatever. Yes, one of the things that we want to do is we want to reward our shareholders and pay a dividend. That's something that we've talked about. We've been talking about that for since 2019, when we started to get some footing into the space in China, and we looked at the forecast. Yes, a dividend is something that we will plan on doing. Obviously, we have to balance paying out a dividend with growth opportunities, right? There are so many opportunities in front of us right now. It's wide open. The space is wide open. So there will undoubtedly be some growth opportunities for which we will have to reinvest. But certainly, taking a portion of the profits and paying a dividend is definitely something that we plan on doing over the next, let's call it 12 to 18 months.
Okay, so Johnson, we're running about 10 minutes behind. We get a lot of questions that came in. So before we bring on the next presenter, I want to ask you kind of our favorite question here, which is, in your opinion, top 3 reasons why investors should consider Peak Fintech stock today.
Okay, well, you know what? It'll change slightly from the first time I was asked the question in the program, but certainly, the number one thing is this is not a venture, Jack, right? We have established clear demand for our services. It's all about growth. So number one, it's a proven service. There's proven demand for the services is the number one thing, I should say. The second thing is the sheer potential of the market. Now, we just talked about one deal here. One deal where we have access to approximately 60,000 online shops, and you see the potential behind the revenue that would be generated from just that one deal. So the second thing is just the potential behind the company is absolutely enormous. Okay. The third thing is the team, the management team, the executives that we've put together, the people that we have who are executing this business plan. These people are very experienced. We're talking about former bank executives, people who know the lending space in China very, very, very well, who have established relationships, who can open doors for us and help us scale the business very, very rapidly. So again, just to summarize, I would say the 3 things are established product demand, sheer size of the market, and the team that's executing the plan. So those are the 3 reasons. And I'll give you a bonus one, the fact that we are grossly undervalued right now, as your audience can clearly see. So that's 4 reasons.
Okay. Yeah, I guess we have some comments on that. Yeah, I think one of the kind of the challenges, ironically, is you're on the CSE, the OTC markets, and companies usually don't have this level of revenue. So it's kind of like the OTC and the CSE is kind of usually based on companies that are around hype, but once you actually have revenues, people they don't believe. It's almost like they don't believe it. And we have that with some of our other companies that have, the revenues are exploding, but until they get to NASDAQ now, they're kind of in this no man's land of, people, it's like almost too big for the CSE, and so it's an interesting space.
Well, that's why those markets are called venture markets, right, Jack? So you get there when you're a small company, you're a young company, basically. You build yourself up and you graduate to a larger exchange, right? And that's exactly the path that we're on. We are currently looking at potentially uplisting to NASDAQ or New York Stock Exchange or whatever, and eventually for our Canadian investors to be on the TSX, the big board itself. So yes, we realize that we will soon be outgrowing the exchanges that we're on right now. We have plans basically to graduate to potentially the NASDAQ or the New York Stock Exchange on the US side.
Fantastic. Okay, so Johnson, thank you again, and we look forward to hearing more news, more of these kind of upside surprises over the coming weeks, and we'll have you back probably at the end of this month.
Well, as soon as I'd like to be invited back, Jack, as soon as we announce the deal with BDC, because we will then have all of the details for the audience in terms of what that deal will mean for the company in the future.
Johnson, look, as Container Guy says, we're all excited. You're welcome. You're welcome back anytime. We'll see you again soon.
That sounds good. All right. Thanks, Jack.